What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Monday, March 25th. Alright guys, Tesla stock here on Friday finished the day down $1.99 per share. That's minus 1.15% in regular trading hours, essentially flat here in the after hours, so nothing to worry about there. Just really quick, if we zoom in here on the intraday 1-minute chart, a little bit sloppy in terms of the setup, but an interesting opportunity that I'm sure we saw some scalpers take here today on Tesla, setting up there. Let's get started here by trying to pull out some hidden bias by doing our daily ritual, our volume profile analysis here on the 5-minute chart. Okay, really what I'm looking for, again, changes in volume that correlate with obvious moves in stock price and that are not contextual compared to that time of day typically. Moves I'm primarily interested in. I want to look at this, and I suppose we should look at this, though fair warning, on this move, it's only going to be a single candle up and 3 candles on the fade, so it's not going to give us a lot of data, but we'll take a quick peek. But if we take a look here, starting from left to right, you can see we got that quick fade off the open, this one little pop on that volume. We saw a big wick on that candle, so this here is obviously a battle candle. We likely saw a lot of buying and a lot of selling. That naturally pumps up the volume, so we can kind of toss that out as a wash. And on the fade, this was rather contextual. We did get a few pops here and there in terms of buying candles. For me to really pull out obvious bias, I prefer to see those consecutive, but just understand that we did see some pops on the green candles, 3 in a row, and then a continuation on the fade, which is very contextual. If, very little there, but if anything, very small amount of bullish bias on those little pops. But again, I prefer to see consecutive candles. It pulls out that kind of fooled by randomness risk. Okay. Now, again, not a lot of data on this one candle, but we did see a pop in volume on that buying candle, and then a quick fade along with the fade in a stock price, which is textbook, very short-term bias. But again, is it the craziest bias we've ever seen? No. If we saw 5 candles in a row of 2 million plus, that would be very obvious. But just a quick little volume profile analysis here, and we can move on because there's not a whole heck of a lot else to pull out. But I will. One thing that just caught my eye. See this move here? We got, what is that, 7 consecutive green bars. And we did see just a hint of increasing volume in the back half of that upside move. Thought that was interesting to point out. So let's move on here now to the 30-minute chart and take a look at those self-fulfilling prophecy psychological levels that I'm paying close attention to here come Monday. Now, guys, this is obviously a very heavily watched chart, the 30-minute, with 2 heavily watched indicators. That's the self-fulfilling prophecy mentality here. Of the 50 period, which is that white line, and the gray line is the 200 period. So not only do we currently find ourselves between 2 big technical levels forming a channel, that's 177.50 to 180, and that 166.50 to 167 range, which we will of course talk about once we get to the daily. But here on the 30-minute chart, this channel, after the close of after hours, between the 200 and the 50, this will pick a side come Monday. Okay, so let's make this really simple. Bears, let's start with you guys, just really quick. You guys want to see ideally a force down from that 50 period, a high volume downside break through that 200 period. Any retests at all, it would likely be retesting the 50 as the 50 crosses over. You would want to see that retest, that pull back upside and retest on low volume, and then the dump off if we were to see confirmation on as much volume as possible, that rejection, right? That shows a big sample size coming in and saying, okay, we're breaking, we're retesting, and we are confirming that resistance level, at least in the very short term. Bulls, for you guys, same deal, just to the upside. You want to see this 50 period break hard on big volume, which would of course help force that 50 period to flatten out and maybe curl back upside. Any retest at all, if we saw one to begin with, again, you want lower volume, and then boom, confirmation on big, high volume, above average. All right, but this 30-minute is going to pick a side here in terms of these moving averages. Again, very psychological levels come Monday because it's just about as tight as it can get. Let's take a look at the 4-hour chart. You can see here that 50 period is very much so in play. So we better take a look. Bulls, very simple here come Monday. again, high volume upside break ideally. This 50 period's a slower moving average, okay? Break on high volume, low volume retest, and boom, confirmation on big volume, okay? Just reclaim that 50 period as a short-term resistance to the down, or sorry, as a short-term support back to the downside. A psychological level beneath the stock price is ideal if you're a bull. That's really about it here on the 4-hour. If you're a bear, any test at all, you just want to see a rejection. You want to see that 50 period act as kind of a descending resistance level with an ideal curl more aggressively to the downside day by day if you're a bear. Now, to the daily, because this is by far the most contextual chart and paints the clearest image, levels. Okay. Guys, today, Tesla tested, Friday, right? Tesla tested the downside of this 166.50 to 167 technical level that I've had drawn for a while now. Okay, it's a very clear technical level, and we know technical levels very often become psychological levels. We held that today. Okay, we did a pretty good job of holding that. If we see another test on Monday, bulls, I really want to see that hold, a repeat of today. Bears, I mean, your one and only goal come Monday is to crack that to the downside so you can set up for a downside test in the near future of 154.50 to 155. That next technical region. But bulls, we know that 177.50 to 180 range is a huge technical level and now becoming a big psychological level. So above 180 just to get through and out of that range is really the near-term goal if you're a bull. That starts with holding 166.50 to 167. Okay, and whether we see a retest of that or today was the hold, that's a necessary level to kind of use as that strength, that kind of trampoline to push us up for a real honest test of the lower end of that region, which is 177.50. Get up through there, reclaim 180 is ideal in the near term. But again, starts with holding that 167 range. It's a very technical level, and I think the more time goes on, the more people are going to have that drawn, hence why it turns into a psychological area. Now, what was the bias out of the options chain here on Friday? Look at this. This is really interesting. 2.15 million total contracts traded. Very little bias. It's almost even today. We had 1 point, at least on the overall, and then we'll break it down by time frame. We had a 1.06 million calls, 1.09 million puts. Essentially even here. And if we look and break this down by the short-term speculator category. So these are those short-term bets being placed of 0 to 20 delta range. 454,000 calls and about 378,000 puts. So we're seeing essentially an indecisive overall call put ratio. Really interesting with that much volume to see it essentially break even. But in the short term, we're seeing a slight call side bias. So listen, Monday here is a technical decision day. All right, especially on that 30-minute chart. And those are the levels that we laid out that I'm going to be paying very close attention to. We're going to see a lot of traders making decisions around those self-fulfilling prophecy moving averages, right? And those technical levels if we see tests of either one. Listen, if you got value out of that video, please subscribe to the channel. I greatly appreciate it. And I'll see you in the next one.